In this video, we're going to talk about pump and dump in stocks. Beware the pump and dump in stocks. Let's get started. Now, this happens to anyone that invests in stocks, whether it's an institution, a corporation, or someone that likes to buy and sell stocks, an individual investor, whatever. At some point, this will happen to you. It has happened to me several times. And I consider myself the type of investor that should know better, right? But greed gets the best of all of us. All of us have greed in us. I don't care if you're a saint, you're a sinner, you go to church every Sunday, you're in the choir, you try to do everything right. It happens to you because we all have greed. That's just the way it is. Now, having said that, what exactly is pump and dump when it comes down to stocks and crypto? Well, let's look at it like this. Let's say if you follow the market like I do, and you notice this one stock that was always trading low, always in the basement, right? And then all of a sudden, you start to see it start to rise, right? Now you starting to, pay attention to it now, but you're not doing anything. You're just watching it. And the stock goes from maybe $5 to $7, from $7 to $10, from $10 to maybe $12. So now at that point, it's got your attention. So what do? You throw you throw a few bones in there, right? Because nobody wants to miss out on the action. So you throw some bones in there to see what happens. All of a sudden, that little money started growing in the market, and you're saying, wow, maybe I need to buy some more shares of this because it's still trading low enough that maybe I should buy maybe 50 shares, or maybe I should buy 100 shares, depending on what your money looks like, right? And so then you sell maybe some good stocks just to buy that stock. And your money's still kind of right. Now it's up to 20. Now it's getting around $30. Now, this is where it gets interesting for some people. There's been videos out here where people get really greedy because that get-rich-quick scheme set in. And all of a sudden, now you thinking about how much money you're going to make if this stuff take off. You're gonna be a millionaire, right? You're gonna be a millionaire. You're thinking about the island you're gonna be living on. You're thinking about the cars you're gonna be driving. You're thinking about the house you're gonna be living in. So then now you're starting to think, well, maybe I should sell more of my stocks that was doing good for me, but not like this stock. So then you start selling off your other stocks to build this one up. So now, what is it called? It's called pumping, right? Now you pumping it up. You're pumping that stock up. Not just you. A lot of other yous out there too, okay? So everybody's pumping this stock up, right? Thinking that everybody gonna get rich. You got some people start borrowing money, doing cash advances on credit cards, borrowing money from friends, exhausting their savings account and their checking accounts, putting their house up for collateral, all to buy more shares. And then, what happens? The carpet is pulled from under us, right? And you be saying, like, what the heck just happened? Now that stock is trading back at $5 a share. It went all the way up to $50 a share. And it's all the way down to $5 a share. Now, the more stocks you buy, if it's doing good, you don't need a lot of it. Rich people, they buy millions of shares or something. So even if it went up 5 cents, you'd have made a lot of money if you own a million shares. So if the more shares you own of something and it goes up, well, you're going to make money. What kind of stocks are these that do that? That they do that pump and dump on? Mainly dirt cheap stocks like penny stocks that aren't really regulated, cheap farmer stocks, where they in the process of trying to get patents on it or whatever they're trying to do. Chinese stocks, because the government is involved with Chinese stocks and that's for another day. But, Chinese stocks, anything like that, or stocks that just wasn't selling, can be used as a pump and dump scheme, right? People have lost hundreds, thousands, millions, cars, houses, credit card, maxed out, everything to this scheme. So how do they pull it off in most instances? Well, the way they got me was, I was riding down this one stock, right? And then at the very end of the market closing, they sold. They sold everything. And then when the market opened back up the next morning, by that time it was too late. The stock was back down to where it started out at. Them people pulled their money out, made millions and billions, and left people like me and you holding the bag. And when nothing you can do about it, even if you did a stock alert, well, you're going to probably get that alert the next day, like it happened to me. By that time, it's too late. They didn't pull the carpet and that stock plunged. And I left I lost a lot of money. Let's go there, okay? And, and you think about it, it could always been worse. What if I was one of those people that went crazy with it, to borrowing from the friends, taking cash advances, and exhausting my savings and checking and selling all my diversified stocks? I would have been in a lot of trouble. And a lot of people lost their shirts like that. So where am I going with this? If it's too good to be true, chances are it is. Don't get caught up in the hype. Stay diversified, meaning, you're investing in several or more different stocks, not just one. It's like if you work for a company and it's a good company and the company making a lot of money, right? And they got stocks that employees can buy. Employees get burned when they put all their eggs into that one company, because you're not sitting at the board table. You don't know what's really going on. And all of a sudden, the company go under. Now, you done put all your apples in that one company, you done lost your shirt. It's best to stay diversified. Buy, several different stocks, different corporations. And what I try to do, and I'm not a stock advisor or anything like that. You have to seek with a licensed professional for that. But I try to stick with well-run companies, like companies in the S&P 500, blue chip corporation, and some growth stocks. Other than that, I try to stay away from a lot of cheap cryptocurrency, penny stocks, cheap pharmaceutical stocks, all that stuff, because in the end, you can be really burned if you took that route. That's all I have for you. Again, this is Kate back at it with a new video. Take care, guys and gals.